The digital gold rush is back on. Bitcoin has just shattered a critical resistance level, a price point many analysts believed was months away. This isn't just another market fluctuation, it's a seismic event that could redefine the future of finance. Are we on the brink of a new bull run that will dwarf all previous records? Or is this a bull trap set to ensnare unsuspecting investors? The stakes have never been higher. In today's comprehensive analysis, we're cutting through the noise. We'll dissect the macroeconomic factors fueling this surge, from institutional adoption by Wall Street giants to shifting regulatory landscapes across the globe. We'll also feature exclusive insights from leading market analysts, revealing their bold predictions for where Bitcoin is headed next. This is the definitive briefing you can't afford to miss. The crypto market moves at lightning speed, and staying informed is your greatest asset. To ensure you never miss a critical update, take a moment to click that subscribe button and activate the notification bell. Joining our community means you'll always be one step ahead, receiving timely analysis that helps you navigate the volatility and seize opportunities. As a special thank you for joining us, new subscribers receive instant free access to our Bitcoin Mastery Guide. This exclusive resource is packed with advanced charting techniques, risk management strategies, and a breakdown of the key on-chain metrics the pros use. It's the perfect companion for your journey to becoming a more confident crypto investor. Let's start with the current Bitcoin price situation and what the numbers are really telling us. Bitcoin is currently trading at levels that have caught the attention of both institutional investors and retail traders worldwide. The market is in a delicate balance, consolidating after a significant run-up. We're seeing the price test crucial psychological and technical levels, which often act as battlegrounds between bulls and bears. Understanding these dynamics is key to anticipating what might come next. The technical indicators are showing some fascinating patterns that could signal major movements in the coming weeks. Key support levels, which represent a floor where buying pressure has historically emerged, are holding firm for now. Conversely, resistance levels or price ceilings are being tested. A decisive break above this resistance could trigger a new wave of buying. We're also closely monitoring moving averages like the 50-day and 200-day. A golden cross, where the 50-day crosses above the 200-day, is often interpreted by traders as a long-term bullish signal, and many are watching to see if this pattern solidifies. Global trading volumes have increased by significant percentages, indicating renewed interest from international markets. But it's not just about the volume, it's about the nature of that volume. A surge in spot market trading, where Bitcoin is bought directly, suggests a stronger conviction for long-term holding compared to derivatives trading, which is often more speculative. Furthermore, on-chain data, which analyzes transactions directly on the blockchain, reveals that long-term holders are accumulating, a sign of confidence in Bitcoin's future value. Metrics like the net unrealized profit loss, or NUPL, show us the overall profitability of the network, helping to gauge whether the market is overheated or has room to grow. Now let's examine what leading cryptocurrency analysts are predicting for Bitcoin's future trajectory. The consensus is cautiously optimistic, but opinions diverge on the timeline and magnitude of the next major price move. Several prominent analysts are forecasting Bitcoin could reach new all-time highs within the next 12 to 18 months. The bullish case is compelling. These predictions are often anchored to Bitcoin's 4-year halving cycle, a pre-programmed event that cuts the new supply of Bitcoin in half. Historically, these supply shocks have preceded significant bull runs. This, combined with the massive inflows of capital from newly approved spot Bitcoin ETFs, creates a powerful argument for upward price pressure. These predictions are backed by increasing institutional adoption and growing acceptance of Bitcoin as a legitimate asset class. We're no longer talking about a niche asset. We're seeing Wall Street giants, pension funds, and multinational corporations actively participating. This institutional stamp of approval not only brings in vast amounts of capital, but also lends credibility and stability to the market, encouraging more conservative investors to get involved. Market sentiment indicators like the popular Crypto Fear Greed Index are showing a shift toward optimism. This index analyzes factors like market volatility, social media trends, and trading volume to produce a score of market sentiment. While a move towards greed can signal growing confidence, experienced traders know to watch for potential volatility and signs of extreme greed, which can sometimes precede a market correction. It's also crucial to consider the bearish perspective. Skeptics point to persistent macroeconomic headwinds, such as high interest rates and geopolitical instability, as potential dampers on a full-blown bull market. Regulatory developments continue to shape Bitcoin's landscape, with several countries making significant policy announcements. The global regulatory environment is maturing from a patchwork of disparate rules into a more cohesive, albeit complex framework. This evolution is perhaps the single most important factor for long-term, sustainable growth. Recent regulatory clarity in major markets has provided more certainty for both individual and institutional Bitcoin investors. The approval of spot Bitcoin ETFs in the United States was a watershed moment, effectively creating a regulated and accessible bridge for trillions of dollars in mainstream investment capital to flow into the Bitcoin ecosystem. This has fundamentally de-risked Bitcoin for many large-scale asset managers. These regulatory frameworks are creating a more stable environment for Bitcoin adoption and mainstream acceptance. In Europe, the Markets in Crypto Assets, or MiCA, regulation provides a comprehensive rulebook for the entire European Union, offering legal certainty for crypto service providers and consumer protection. Meanwhile, international cooperation on Bitcoin regulation is improving. Global bodies like the Financial Stability Board are working with G20 nations to establish common standards, aiming to prevent regulatory arbitrage and ensure a level playing field worldwide. This reduces systemic risk and fosters a healthier global market. Bitcoin adoption is accelerating across multiple sectors, from retail payments to corporate treasury management. While Bitcoin's identity as digital gold or a store of value is well established, its utility as a medium of exchange is rapidly improving. This is largely thanks to Layer 2 solutions like the Lightning Network, which enables near-instantaneous low-cost transactions. This technology is making it practical to buy a cup of coffee with Bitcoin, a crucial step for mainstream retail adoption. On the corporate front, major corporations are adding Bitcoin to their balance sheets as a hedge against inflation and currency devaluation. But the story doesn't end there. Forward-thinking companies are now exploring Bitcoin for operational purposes. This includes using it for international payroll and cross-border settlements, bypassing the slow and costly traditional banking system. This use case leverages Bitcoin's core properties as a global, borderless, and censorship-resistant network for value transfer. Educational institutions are incorporating Bitcoin and blockchain technology into their curricula, preparing the next generation of developers, entrepreneurs, and policymakers. Universities are establishing dedicated research centers to explore the technology's potential, creating a robust talent pipeline. At the nation-state level, we're seeing bold experiments like El Salvador's adoption of Bitcoin as legal tender. While the results are still being assessed, it has ignited a global conversation about the role of decentralized money in the 21st century. Finally, let's look at the foundation of it all: Bitcoin's mining network. The network continues to evolve with increasing focus on sustainable energy sources and improved efficiency. The network's hash rate, a measure of its total computational power, is consistently reaching new all-time highs. A higher hash rate means more miners are competing to validate transactions, which in turn makes the network exponentially more secure and resistant to attack. The shift toward renewable energy in Bitcoin mining is addressing environmental concerns while maintaining network security. The narrative around Bitcoin's energy consumption is becoming far more nuanced. We're seeing a significant trend of miners co-locating with stranded or excess energy sources, such as hydroelectric dams, solar farms, and wind turbines. Innovative miners are even capturing flared methane gas from oil fields, a potent greenhouse gas, and using it to power their operations, turning an environmental liability into a productive asset. This is driving a green transition within the industry. Hash rate improvements and network security enhancements are making Bitcoin more robust than ever before. This is driven by both the geographic decentralization of mining and technological advancements. Following a ban in China, mining operations have spread across the globe, particularly in North America, making the network less susceptible to the influence of any single nation-state. At the same time, new generations of ASIC mining chips are incredibly efficient, using less energy per computation, further improving the industry's sustainability profile. Ultimately, Bitcoin's decentralized network continues to demonstrate unparalleled resilience and reliability across its global infrastructure. With a historical uptime of over 99.98% since its inception, it stands as one of the most robust and dependable financial networks ever created. This unwavering stability, combined with its growing adoption and regulatory clarity, forms the bedrock of its value proposition for the years to come. To summarize, Bitcoin's current position shows strong fundamentals. We've seen remarkable price resilience, establishing solid support levels amidst economic uncertainty, signaling a maturing asset. On the regulatory front, the landmark approval of spot Bitcoin ETFs in the US has opened the doors for institutional capital and provided new legitimacy. This is coupled with a significant uptick in global adoption, from large corporations to grassroots movements. And underpinning it all is the network itself, more secure than ever, with its hash rate consistently near all-time highs. Looking ahead, the confluence of these factors paints a bullish long-term picture. The institutional wave is just beginning. Initial ETF inflows are likely just the start. A major catalyst is the supply shock from the recent halving, which has historically preceded significant price movements. Technologically, the ecosystem is evolving rapidly. The Lightning Network is making micropayments a reality, and innovations on Layer 2 are expanding Bitcoin's utility beyond just digital gold. This combination of institutional demand, tightening supply, and expanding use cases positions Bitcoin for continued growth. As always, remember that cryptocurrency investments carry risks, and this is not financial advice. Volatility remains a key factor, and the regulatory landscape, while improving, can still shift. It is essential to do your own research, understand your personal risk tolerance, and invest responsibly. Never invest more than you are willing to lose. Prudent risk management is paramount in this dynamic market. If you found this analysis helpful, please subscribe to our channel for more cryptocurrency updates. We'd love to hear from you in the comments. What development are you most excited about? And don't miss our next video, where we'll analyze Ethereum's latest developments and the potential impact of its own ETF. Thanks for watching, and we'll see you in the next video.